Hello, everyone. My name is Marcin Tomaszewski. I'm an economist at the European Bank for Reconstruction and Development, EBRD in short. I'm very glad to be a speaker in the USA-CEE Investment Summit this year. And to kickstart our presentation, when you think about the region of Central and Eastern Europe 30 years ago, you should remember a massive transition from centrally planned towards market economies. That transition was mainly from almost absolute state ownership, which turned out to be inefficient and costly for the societies, towards a more dynamic and resourceful private sector. That was 30 years ago. Today, however, amid the COVID-19 pandemic, the increasing government spending, mounting bailouts and nationalizations, the state strikes back. This is something which definitely will have an impact on the region. But before we discuss, the opportunities and threats of the increased states in the region, let us have a quick look at the macro. So, of course, the situation at the moment is very dynamic. So the big pharma companies announced, the successful in production of vaccines. So, of course, this is something which is positive. So, when we talk about the situation next year, the picture can be a bit different, hopefully towards more positive. So we see that, the region has been experiencing a cyclical slowdown already since 2019. Then the first quarter of this year was already slower than actually last year, but there was a big shock in the second quarter of this year. So you see the red dots in the chart, which is effectively these are the countries of Central Europe region. On average, the economies of Central Europe dropped by about 10% quarter in the second quarter compared to the second quarter of the previous year. Of course, some vibrant recovery was registered already in the third quarter. So today, actually, we are still waiting for the official statistics to be published, in the upcoming days. But because of the second wave, because of winter, the picture, will not be that optimistic this year. But because of the vaccine, the situation can improve next year, hopefully. So compared to the global financial crisis, so we see that the current crisis is much more severe. So the impact is 2 times greater than during the crisis of 2008 and 2009. And our anticipation is that the recovery will last a similar time period. So the expectation is that we come back with GDP levels to the same level pre-COVID, not earlier than end 2021. So why the current recession is so dramatic? There are 4 key areas which play a role here. So one is, of course, the containment measures. So effectively, we talk about lockdowns. And the lockdowns, as we know, they directly impact both domestic demand and supply. Another variable here is external shocks. So for countries which are commodity producers and exporters, the drop in commodity prices also has a very negative impact on the economy. Another external shock is trade and global value chains. For countries of Central Europe and the Baltic states, like Hungary or Slovakia, which are very much integrated into global value chains, especially when it comes to automotive industry, this shock was extremely severe. So to illustrate the picture better, so for Hungary, about 30% of manufacturing is in automotive industry, while for Slovakia, automotive industry, including smaller domestic suppliers, accounts for almost half of industrial production and about 48% of total exports. For many countries, also the tourism is something which impacted the situation dramatically, but maybe less for Central Europe, but more for Southern Eastern Europe, like Croatia, like Montenegro, maybe Greece. Another, variable which shapes the situation of the COVID crisis is the policy response. So countries managed to put huge fiscal stimuli to support liquidity of companies, but also to keep employment. Some countries managed to provide huge packages, so around or even more than 10% of GDP. Some countries provided smaller packages. So the impact can be mixed. But what's also very important, so having the three variables which I mentioned only now, there is one key element, which is the reaction of companies, reaction of citizens on the persisting shocks. So, some households decide to cut consumption because they are not certain if they keep employment. Some companies, they need to shut down because of the lack of demand. But also, this crisis can affect the banking sector. So which means that many companies will not pay back their loans. So this will need higher non-performing loans, which can ultimately lead to less credit in the economy if NPLs rise. So when it comes to Central Europe region, the financing costs for the governments are historically low, which allowed the states to provide generous fiscal stimuli, and this allowed the unemployment rate to keep them low. So you see in the slide on the right-hand side, the unemployment rates above 12% during the global financial crisis, and at the moment this is still pretty low, around 6%. Just to finish up the macro section, so our expectation for Central Europe is the following. So there will be a sharp contraction this year. So it's going to be, on average, about 4% drop in GDP in 2020, while next year a recovery is expected by around 4.3% of GDP. And of course, this is our forecast for today. But the situation, as I said at the beginning, is very dynamic and it can change very quickly. Coming back to the subject of the state, the EBRD launched its latest transition report only 1 week ago. Each year, the subject is different. This time, the subject is about the increasing role of the state in the economy. So we'll discuss, the role of the state in the economies where EBRD is present, which are, the post-communism economies, starting, from Central Europe, Southern Europe, but also touching Central Asia, and at the moment also North Africa regions, but we will not focus on this region in this presentation. So at the beginning, we'll document the size of the state. Then we will focus or we'll paint a portrait of state-owned enterprises. We will be discussing state banks being on the rise. And finally, we'll be talking about the role of state in the green economy transition. So since mid-19th century, the government spending has risen as a share of gross domestic product, reflecting the increasing importance of education, rising life expectancy, the growing cost of providing education or healthcare. And we see in this slide that government spending in post-communism region, which also includes Central Europe, is about 35% of GDP. So this is in line with the characteristics, which also includes aging population. So one would expect, if the population is aging, that the chunk of the state goes up as there's higher expenditure on the government side. But when it comes to employment, the EBRD region is a bit different. So we see that over time, employment in state-owned enterprises or broader in the state sector declined from about 50% in early 90s to almost a quarter in 2010. And this is still higher than in other economies. We say that these are comparator countries. So these are economies outside EBRD region, which have similar characteristic, which means the size of population, GDP per capita. And we see that the employment in Central Europe region, EBRD region, is about 7 percentage points higher than in comparator countries. What we also see that, we said that the employment went down from about 50% to 25% today. But at the same time, there are more and more people who support for public ownership. So we see that this is the case, especially for post-communist region when compared to advanced countries. So even when we compare cohorts, so people who were born in the same time period, they are more and more keen to support public ownership. And if history should guide us, the current epidemic is likely to further increase support for public ownership. So we see that previous epidemics, they dented trust in economic institutions, which is free markets and democracy. And people who reach their adulthood during major recessions, they have a more positive view on public ownership and redistribution. And also we see that people who were exposed to previous pandemics during the formative years between 18 and 25 years old, they are more keen to support public ownership. So we see that the difference is between 2 and 6 percentage points. And if this is really the case, so this 6 percentage point can make a difference and be enough to shift the majority view in some of the countries. State-owned enterprises. Of course, state-owned enterprises, versus private sector companies, they should have a role in the economy. So in EBRD region, state-owned enterprises account for almost half of public employment. They are very much engaged in utilities, transportation, and energy sectors. Their role is mainly to provide services at affordable prices for remote areas and for low-income households. And we also see that looking at the regional distribution within the countries, that these companies can play a role of automatic stabilizers. So in regions where unemployment is relatively higher, there is a greater share of state-owned enterprises or people employed in state-owned enterprises. So during a downturn, state-owned enterprises can provide stable employment. But there is a problem with state-owned enterprises, that very often governments struggle to run SOEs efficiently. And it's not only state-owned enterprises that can provide subsidized services, including for lower-income households. This can be also private sector companies, but people who obtain the services from private sector companies, they can receive subsidies or mean-tested benefits. But if private sector services the society, there is one requirement. Private sector solutions require capacity to set up and monitor such schemes and to administer targeted means-tested benefits. So we see that for states which have administrative capacity limited, there is more state-owned enterprises involved in providing such services compared to private sector companies. In times of crisis, private debt tend to become public debt. Governments often try to rescue private companies through injection of equity or nationalization. This can be problematic for countries with poor governance, and in particular, when government is not efficient. For instance, in our region where EBRD is present, which also includes Central Eastern Europe, there is a problem with separation of ownership from regulation. What does it mean? Sometimes, the same ministry is running a state-owned company, but at the same time, the same ministry is a regulator. And there are also economies where even state-owned enterprises have even regulatory powers. Another problem with state-owned enterprises in our region is that they sometimes only provide services, but they are not really in charge of they are not decision makers, and they do not really decide about the ultimate products that these companies produce. So and sometimes even when it comes to nominations, they are not based on merits or qualifications. There is 3 additional minutes on my side. So let's quickly talk about banking sector. So we see that banking sector and the share of state in banking sector is increasing. This is especially relevant in the post-crisis period. So we see that in some of our countries, the banking sector consists by more than 50% by state-owned banks. So, of course, the banking sector, can have a positive role because the lending is less strict. For instance, because the banking sector can provide financing to companies which have less collateral, or they are still young, like startups. But this results in lower return on assets, and also there is a risk of higher non-performing loans. So we can see it here also that during the global financial crisis, state-owned banks were much more active than private sector banks. And very shortly about the state and green economy transition. All countries, they agreed on some targets when it comes to greenhouse gas emissions. But these targets are based or related to GDP. But given the fact that GDP is increasing in those countries, the absolute amounts of greenhouse emissions are also increasing. And in order to reach the Paris Agreement or the targets from Paris Agreement, more needs to be done, and countries need to be more ambitious. So we see that in the region, there are already laws and policies that manage to reduce CO2 emissions. So we see levels from 1997 to 2016. The absolute volume is higher, but thanks to those regulations, there was a small decrease in CO2 emissions, which is not really the case for other greenhouse gases. So countries need to be more ambitious. So what the state can do in supporting this green transition? So short term, also this includes the recovery post-COVID. The state should help in finding labor-intensive green projects, such as retrofit government-owned buildings or invest in energy-efficient buildings. Mid-term, the role of the state is to get energy prices right, limit barriers by providing information, and improve access to credit. Longer term, it's about catalyzing restructuring and creative destruction. So as you can see, the Central Europe region find themselves at the crossroads. There can be an optimistic scenario. The COVID crisis will lead to improved governance, and the carrying hand of state can guide countries through low carbon transition. But there can be also a pessimistic scenario. So the grabbing hand of the state will lead to corruption and nepotism. Increased state presence in the economy can tilt the playing field against the private sector. Thank you very much. That was the